Now, what can we expect for the last 2 hours of trading?
We brought together the Fox panel, brains and beauty, of course, to talk about it, starting with independent trader Eric Bolling. What a face. What a put him. Mike Norman, founder of Economic Contrarian Update. Nicole Ridgway from smartmoney.com. Jim Pettakakis, assistant managing editor from U.S. News and World Report. And Peter Schiff of Euro Pacific Capital. And let's start with you, Eric, because you're the oil trader. You're watching this decide whether to hit 100, and then you see the markets finally really kind of reacting in a negative way.
Yeah, I was down there for the whole release, the pre-release. Last night, oil traded $98.5, almost $99 a barrel. People were waiting for a bullish inventory number. They got it surprised. They got the surprise for the first time in 4 weeks. The surprise was to the bearish side, and you saw some scrambling out of positions. Liz, I got to tell you something. I've seen this before. We have an option expiration next week. Keep your eyes open.
Tell us what that
could
means.
be. Okay, that's once a month. These contracts expire, so people holding contracts have to get out. Typically, you see higher. You see sometimes 50% higher volatility on these days. What I really think is going to happen is if we start to find a home in this mid-$90 barrel oil price, you're going to see that push towards $100 barrel on that option expiration.
Mike?
Well, if we're talking about oil, here's what I don't understand, and I'm going to ask you the question, all right? Since 2002, we've seen global consumption rise 6 million barrels a day, but we've seen production rise 7 million barrels a day. The price has gone from 10, 15 a barrel to 100. Global stocks of oil right now near an all-time record high, about 4.2 billion barrels. I just can't figure it out. Why do we go from 10 bucks to 100 when production is meeting consumption right now? It's speculation.
Can I throw this out here? It's not speculation. It's a situation where we've peaked at production. Production is actually declining year over year versus... No. You gave me from 2002. I'm telling you from 2006. Our production, the world has peaked out. Unless we find new areas to drill in, we're going to start to decrease the amount of oil we pull out of the ground.
So, Peter Schiff, why today? Why do the markets fall more than 200 points today when oil's been moving all over the place and the markets haven't moved in lockstep?
Well, maybe they finally reacted to some of the comments overnight coming out of China about moving out of the dollar. But, the problem is the world has been printing a lot more money than we've been producing oil. That's what's been going on. This is all inflation. You have central banks around the world creating too much money. Even the euro. We talk about the strong euro, but the euro is weak, too. It's just not as weak as the dollar.
So, Peter,
look at the price of gold. It's rising against all currencies. And the price of oil has remained constant in terms of gold.
So, Peter, what happens?
The price is not rising.
What happens to the markets within the next hour and 2 hours?
Well, I don't know what's going to happen in the next hour, but the markets are going down. The Dow is down big today, but if you price it in other currencies, it's losing twice as much value. Yesterday, you guys were talking about the fact that the dollar was weak, but it was not affecting U.S. stocks. The weak dollar always affects U.S. stocks because the Dow, when you say the Dow was 11,500, it's not 11,500 bananas, it's $11,500. And whenever the dollar loses value, our stocks lose value.
Okay. Nicole, let me just ask you, though. The folks out there looking at the market, it's now down 243. The Dow Jones is down, NASDAQ as well. Yesterday, they saw the market up. What are they to think? What's driving this market? Because the news on oil was out yesterday as well.
Well, I think that the financials are definitely impacting the market today. There's no doubt about it.
But they were impacting it yesterday, and the market was up triple digits.
Yes, it's been a very confusing run for the last few weeks. We're getting a lot of conflicting different reports, and it's hard to make sense of it all. And everyone's worried about the holiday retail season and all these pressures on consumers. They're worried that oil is going to affect consumer spending, and they're worried about the subprime mess being extended even further.
That's the thing, we haven't seen it. And as long as we haven't seen the impact on consumers, we saw an uptick in the third quarter for consumption. We see exports growing and contributing to the economy in a way that we have never seen before.
And,
so
that's the
if the economy is handling the higher oil price,
that's right.
We can look at it and not get that disturbed about it. Liz, to your question, what's going to happen to the market? Look, it seems like...
Wait, hold on. You ask your own questions and then come out with your own answers. We haven't given Jim Pettakakis a chance. Go ahead, Jim.
Now, look. So maybe the difference today versus yesterday is that right now people are looking at what the economy did in the third quarter, which is 3.9%. Now a lot of economists think the economy may have been growing at 5% in the third quarter. That makes it far less likely the Fed's going to cut rates. But then to keep cutting rates when the economy is growing at a 5% pace. rates, I think would really send traders scrambling because it looks like it's inflationary. And right now, I think the market is very worried that the Fed is behind the curve with the financial crisis, and if they're not going to cut rates, they're worried they're going to get further behind the curve, and where the financial crisis could expand and get a lot worse. So I think that's one thing, in addition to oil, in addition to the dollar, which is weighing on the market.
I love, Eric, these worries. Each day, it's almost as if people and investors wake up and say, what should I worry about today? And it's always the same things that were in place the day before.
Well, there's something new today. We haven't touched on it yet. In GM, the GM news, they reported a loss that was 10 times what people expected, and that really caught a lot of people by surprise. GM, we all thought GM was on a recovery pace, and then they throw this at us. I haven't. You stay away from autos. Autos, if you look at in Barron's every week, you see market indicators, and it shows you how many autos are sold domestically, how many autos are sold domestically from imports, and those are we're losing 8%.
GM is doing really
imports
well.
Imports are increasing 8%.
I mean, they're the biggest automaker.
They're not doing that well if they report a $32 billion loss.
What are they off? A couple of percent. They're the biggest auto manufacturer in China. Is going to be the biggest market. I happen to own GM stock. I bought it in the high 20s. Okay, it went to 42. It pulled back, but I'm going to hang on to it.
Peter Schiff?
Well, to say that the economy is not being damaged by these high oil prices, part of our trade deficit, one of the reasons it's so large is because oil is so expensive.
Yeah, but
so
Peter,
we're borrowing this money. The nation is going deep into debt right now so we can pay for this oil.
The trade deficit has been shrinking. If you look at the past few quarters, we've actually had a reduction in the trade deficit and a broader measure, the current account deficit. It's turned around, and it's turned around even with record high oil prices and a lower dollar.
No, it
hasn't turned around.
We've had this slow motion crash in the dollar month after month, year after year, and all the economy has done is continued to boom. November's the 6th year anniversary of this boom.
Gang, we're going to have to take a short break. We'll be right back. We're keeping our eyes on the market for you.